watching Primetime and I'm Tamanna. Before we start, we're wishing all our viewers at Bloomberg Quint a very happy Diwali. Let's begin with the headlines. Minutes of the RBI's monetary policy meeting show that upside risk to inflation and fiscal worries kept the RBI from cutting rates in its October policy. International firms including Aircel, ArcelorMittal and POSCO express interest in Essar Steel and Bhushan Steel's assets. JSW Group and Tata Steel are the domestic buyers in the race. Reliance Jio cuts validity and adds a cashback offer for its popular schemes. Consumers will pay more as the telecom major looks to boost its average revenue per user. Piramal Enterprises will raise 7,000 crore rupees through a mix of QIP and rights issue. The proceeds will be used to expand the group's presence in the financial services and housing finance space. And it's turning out to be a good quarter for cement companies after ACC Ultratech Cement's bottom line also beats estimates. Indian markets end Samvat 2073 on a weak note, dragged down by banking stocks. But the year has been a good one for equities, with the Sensex and the Nifty reaping returns of over 15% each. And also coming up on the show, we've got the biggest market voices from the markets talking about the year that was and what's in store for equities in Samvat 2074. Chinese President Xi Jinping warns of serious challenges while laying out a roadmap to turn China into a leading global power by 2050 at the Party Congress. And the Reserve Bank of India has released minutes of the October policy meeting today, in which 5 of 6 members voted to hold rates steady. Vishwanath Nair joins us now with the details. Vishwanath, what are the key takeaways from the MPC minutes and what were the contra views?
The Reserve Bank of India on Wednesday came out with the minutes of the Monetary Policy Committee meeting, which took place earlier this month. Now, if you remember, on the 4th of October, the RBI came out with the monetary policy announcement where it said that it will be holding the benchmark repo rate at 6% rather than bring it down as was the broader market expectation. What these MPC minutes show is that 5 out of the 6 MPC members suggested that the RBI hold the rates rather than bring them down. Only one member, Ravindra Dholakia, was one who said that there is a chance that the repo rate can be brought down further. According to Dholakia, the 25 basis point cut which the RBI announced in August was probably too little and too late, and that there is an opportunity to bring down the repo rate by another 40 basis points, looking at the growth concerns which are plaguing the nation. In the first quarter of this financial year, GDP growth has come down to about 5.7%, and that has been concerning a lot of people who have said that probably it is time for the RBI to bring down the interest rates and therefore bring back some of the lost demand in the economy. However, the remaining 5 members have a different story to tell. They are pointing out the inflation concerns which exist in the economy right now. Now, in September, retail inflation, the CPI inflation number came up to about 3.28%. There was a significant jump from what it was just a couple of months before that. So this concern continues to play on the mind of the MPC members, especially Urjit Patel, who said that it is important that the MPC look at medium-term as well as some long-term risks before the MPC decides on any future rate cut decisions. So it is likely that the MPC is not going to cut the benchmark repo rate anytime soon. Chetan Ghate, who is another external member, part of the MPC, suggested that the government's missing of the fiscal deficit target would probably play into the inflation concerns and could probably inch up the inflation number further. So that is again going to be a concern which is going to play on the minds of all of these the remaining 5 members. Michael Patra was the only member out of the total of all 6 who was the most hawkish, who said that probably it is time for the MPC to ready itself to decide for a rate hike going ahead if inflation concerns continue to persist. Urjit Patel also mentioned that another issue which should be looked at and which will be tracked further will be the resolution on bank loan books, bank NPAs problems, which continues to plague the banking system's balance sheet and has been plaguing it for a very long time, honestly. And how that pans out in the next few quarters, that is something that the MPC will watch closely.
All right, Vishwanath is staying on with us because he's also been following the insolvency process in India's stressed steel companies. Global steel giants have been looking to buy SR Steel and Bhushan Steel. Vishwanath, which are the companies in the fray?
So international steel majors like ArcelorMittal and POSCO are currently assessing an opportunity to invest in large Indian steel companies like SR Steel and Bhushan Steel, considering both these companies are under the insolvency and bankruptcy process currently. Now, resolution professionals in both these Indian companies have invited bids, have invited resolution plans from possible potential investors. So in SR Steel's case, these bids are supposed to come in by the end of this month, while in Bhushan Steel's case, the deadline is in December. So that is something that Arcelor and POSCO are currently working on. Now, if you remember, both these companies have not had a very successful run as far as their India forays are concerned. ArcelorMittal has been trying to work out a joint venture with SAIL since 2015, and that has still not seen the light of day. In case of POSCO, they have been trying to develop a land parcel in Orissa where they wanted to set up a steel plant. They have not been able to do that, and POSCO has actually offered to give back the land to the state government since it was not successful in its foray. So for both of these international majors, such a buy of stressed assets would be significant, considering both these companies, SR and Bhushan, have quite modern facilities available in India and have very high production capacities. So any kind of acquisition on these fronts will be beneficial for ArcelorMittal as well as POSCO. Apart from these two large international investors, there's also Tata Group and JSW Group who are currently assessing the opportunity to invest in these insolvency cases. The benefit in the insolvency and bankruptcy code is that there is a well-defined timeline, there is a legal process, as well as there is a chance that the valuation of these assets will be brought down, considering bankers will have to take some sort of a haircut as and when the resolution plans go ahead. So it could be the reason why some of these large steel companies are looking at these stressed assets as a possible investment opportunity.
Well, thanks so much for that, Vishwanath Nair there. Now, Reliance Jio has revised tariff rates on some of its plans today. The modification comes into effect from tomorrow. For instance, customers will now have to shell out 459 rupees, 15% more than earlier for the popular 84-day plan. Sajid Manga joins us now with some other details of the tariff plan. Of course, this is a pre-Diwali plan, but what is in it really for consumers?
So, a week ago, Reliance came out with the Diwali plan, which was more of a cashback plan. 399 rupees for 84 days, 1 GB per day, and you'll get 4 cash vouchers amounting to nearly 400 rupees. So that would have taken consumers up to January end or so. This is much more plan focused on ensuring that the ARPUs, or the average revenue per user, goes up and are maintained at around above 150 rupees. Remember, Reliance Jio came out with an ARPU of 156 rupees, and which was in line with many of the incumbents. And at the analyst meet, it did assure the investors that it will try to maintain the ARPUs above 150 rupees. So if you look at the 399 plan, which is now for 70 days, it basically translates into an ARPU 145 as against 121 earlier. The 459 is a new plan which has been introduced for 84 days. 84 days basically means 3 months of recharge for a prepaid customer. So on that way, the ARPU is there for 139 rupees there. On ARPUs of 1,099 and above, it has gone and given much more. It has reduced the prices there. So in the middle one, because what Reliance very categorically told us was that the most popular plan for them was 399, and the next big plan was the 509 plan. So they brought in the middle plan, which is the 459 between 399 and 509, which is 459, and that brings in a little bit of flexibility, and they hope to push up the ARPUs to 145 and not be able to do any jugglery in terms of ARPUs, which they did last time, because they recognized the ARPU of the first 3 months free period only in July. So in Q3, they're trying to meet the street estimate by saying that we are going to go for 150 rupees plus of ARPU, and for that we will increase the prices. So in effective, as a portfolio for Reliance is trying to increase the prices, and this is good for some of the incumbents, because now incumbents.
But you know, you've been talking about ARPU and Reliance's portfolio. I want to talk a bit about what consumers will play, and if we can, you know, we showed a graphic there on how fewer days that plan is for, where the validity is reduced. So effectively, is it fair to say that consumers will be paying a little more?
So consumers will get the same amount of data for more price. Higher price.
So they're
paying more. There are two legs to the entire thing. The lower leg, where Jio introduced the Jio phone. So you have phones ranging from 9 rupees to all the way to 92 or 98 rupees. There they have increased the data which they are offering to the to the customer. In plans like 1,999 and above, where they are already getting a higher ARPU from the existing customer, they have given them higher data and higher number of days. So they're willing to go there, but that's a very small fraction of the entire thing. The
so
popular one is
you're incentivizing higher spends. You get more bang for your buck if you put more money up front.
But yes.
Okay, well, that is the new Reliance pricing strategy. Those plans kick in from tomorrow. Thank you so much for that, Sajid. Now, Ultratech Cement reported a strong set of earnings in the second quarter, with profit beating street estimates. Nikki Mirchandani sums up Ultratech's Q2 performance in this report.
September quarter has been turning out to be good quarter for cement companies. Second company, that is Ultratech Cement, has delivered strong quarterly performance. If you look, it has not only beat the street estimates in terms of its top line and bottom line growth. Volumes have been super impressive, just how the case was in ACC for that matter. Revenue has reported a growth of nearly 20%, which is way higher than estimates due to higher volume. We registered a volume growth of nearly 18% at 13.2 million ton in this quarter. Well, the third, really important, we saw some EBITDA margin contractions coming in. EBITDA margin contracted to 20.6% as compared to 21.2% in the corresponding quarter of the previous year, but then it's better than the estimates that we were working with. We were working with a number of around 18%. Now, higher power and fuel costs mainly dragged the EBITDA margins lower. This, combined with higher depreciation and importantly finance costs, dragged the PAT lower. Now, profit after tax declined by nearly 28% as finance cost went up by nearly 2.75 times, while depreciation also rose by around 62%. But then we have to remember that the net profit have slipped on account of inclusions of the weak financial of JP Associates. This was something that we were already working with and doesn't come as a surprise. In fact, even after the drop which has come in the profitability, the numbers remain fairly stable and better than what the estimates were. In fact, the management, however, in the con call has said that there has been an acute shortage of sand in the market, which has impacted the performance of the company. However, despite that, the acquired assets at this given point of time are EBITDA accretive for this quarter, which is a positive for the company. Also, it is guided that the cost of sand has nearly gone up by 5x during this quarter. Well, that's Ultratech Cement for you.
And Indian markets ended with losses, weighed down by selling pressure in banking stocks. Nifty snapped a 4-day winning streak, while the Sensex also incurred losses. Broader markets closed around the flat line, while Nifty Bank ended with losses as well, with Axis Bank falling sharply. So how have individual stocks performed in the year that's drawn to a close? Darshan Mehta and Yatin Mota have this special report on the big losers and top gainers from the year that was.
If you look at the entire Sambat performance, metals was one sector which was hated by a lot of analysts, but clearly that is one pack which has outperformed significantly. In fact, if you look at stocks like Hindalco and Tata Steel, both of them have generated returns of over 75%. So that is on the surprising side, wherein it has worked anti-consensus. But what has worked on the consensus side is the pharmaceutical space, which has underperformed general markets. We have stocks like Dr. Reddy's and Lupin down by by nearly 28%. It was a pharma pack, of which Reddy's and Lupin probably have been seeing some big cuts coming in Samvat to Samvat period, which is probably the last 11 months or so. What's done well is DMart. That is one kid, which has done extremely well after its listing. Not even 2 quarters into reporting earnings, and we have seen market capitalization cross that 75,000 crore mark, 3 times up versus the issue price, or probably in the last Samvat to Samvat series. If you talk about broking stocks, they have done extremely well. The financial and the financial services space doing extremely well. India Bull Ventures up 10%, 10 times, in the Samvat to Samvat period. MK Global, Geojit Financial, these are the free brokerage stocks which have delivered almost returns in excess of 3 times. Of course, what's not worked well in the mid-cap space is, some telecom stocks, but, over to Darshan, wherein he has some interesting takes on the mid-cap space.
Well, Yatin, if you're looking at what's happened this year, it's basically the old school or the old stocks that have made a comeback this time. So metals and oil again find mention in the counters which have done well. So these are the counters which did well. So you have the Hindalcos and the Tata Steel and the Reliances of the world which did extremely well. Now, interestingly, 8 of the Nifty stocks have given returns in excess of 50% this time around. So it's been an extremely good year. So more than 8 stocks out of the 50 giving a return of 50%, extremely strong. DIIs have bought in close to almost 1 lakh crore in the cash market this time around. So the liquidity is coming in because of the SIPs or the mutual funds that are there post demonetization. There was no other asset to invest, so money is flowing into equities. Reliance makes a comeback at the top of the helm as far as market cap is concerned. 5.5 lakh crore is the market cap. TCS and Reliance are the only 2 companies which have a market cap in excess of the 5 lakh crore mark. For the first time, all the 3 oil marketing companies are there as part of the Nifty. It is the first time that's happened, so that's very interesting. That happened in the Samvat. Kotak Mahindra and IOC made place as far as this is the 1 lakh crore market cap. IndusInd Bank and Bajaj Finance. What made part of the 2 lakh crore market cap was Kotak Mahindra Bank and IOC, and over 260 stocks. We're talking about stocks above the market cap of 100 crores. They have doubled in a value of 1 year. So it's been very, very interesting as far as some of the counters are concerned. Some stocks that I would want to take off: India Bull Ventures gains of almost 1400%, HEG 700%, Goldstone, Goa Carbon, Venky's, all of them giving in excess of 400%. So it's been a fabulous year for some of the investors who's invested in certain of these stocks that we've named.
Now, as this year comes to an end and a new one is about to start, we also spoke to a host of experts to help you invest better in the markets in Samvat 2074. Listen in.
So I want to build a portfolio because I'm a domestic focused investor that is somewhat insulated against technology coming and taking jobs away from manufacturing, taking jobs away from so many other businesses, right? So the 4 boxes that I came up with, for example, real estate, property has some immunity from technological threat, airlines. Again, I don't think the Hyperloop is going to take off very soon, so we have some ability to be there. Some of the food businesses, liquor businesses, quick service restaurants, I think will do well. So you're trying to construct a portfolio, gaming, entertainment. I think people come to India for its 1 billion consumers, not for the infrastructure play, not for the steel play, but for the consumer. I mean, that's the centerpiece of these 4 things that I'm suggesting to you.
I think insurance will be a big sector. Having said that, I think I've looked at the numbers and I don't think that insurance penetration in India is as low as what people think them out to be. But I think where the play could be is that the ticket sizes could increase. So, as the wealth effect takes on and, health insurance, I think we're way behind, global standards. I think also the way insurance was sold to people, right? It was literally pushed down the throat. I think with digital channels coming into insurance, I think you will have, younger people buying insurance, digitally. And therefore, you could see early adoption. I think logistics could be one sector, with GST out of the way. I think that, that sector was young. It always showed promise. But I think now the trigger is there with the GST in place. And I think, even if e-commerce has to succeed, you will need to have a very strong logistics sector in India.
Philip.
shut it, forget it. That's best for mutual fund. You invest, sleep over it, and then let it grow at its own pace.
Even if you look at the top performing funds, you take 20-year track records, 10-year track records, 18, 20% kind compounding. And if you were to hold them for 10, 15 years, that's incredible rate of return post-tax, right?
Yes.
And Piramal Enterprises will raise 7,000 crore rupees over the next few months. The company has announced a QIP worth close to 5,000 crore rupees and a rights issue of about 2,000 crores. Sajid Mangat caught up with Group Chairman Ajay Piramal and started by asking how he plans to use these funds.
In financial services, one, we have a wholesale book which has been growing rapidly, which has a good quality. So that gives us the confidence that we can continue to invest in growing this book. So some funds will go towards that. In addition, we have just announced recently the housing finance company, and we will use funds for that. We've also got a fund for stressed assets, so that's another area that we will put in funds.
How much funds would it be for housing finance and stressed assets?
Housing finance will need 1,000 crores and stressed assets $100 million, so 650 crores.
What's happening? Because I think you were working on a couple of stressed assets. You were supposed to close at least 2 by the end of the financial year. Where are we on that?
We are working on many assets. Let's see where so we are working on it. Which we will close, when we will close is difficult to say at this stage. But yeah, we are working on more than 2, let's say.
In which sectors do you see most of them
we
coming?
We have said we will do 7, 8 broad sectors, which includes textiles, it includes steel, auto ancillaries, pharmaceuticals, cement. So we will look at those.
You also said very interesting stuff here. You know that pharma space is looking interesting. Does the group wants to go into pharma in a big way again?
So actually, we are quite big in pharma.
Yeah,
itself,
not the one traditional.
We are
pharma.
not in the domestic. Formulation space. We have a non-compete with Abbott till 2018, and in letter and spirit, we will honor that.
And after that, you would look at?
After that, we'll see.
What about stress assets coming in this space for you?
So most of the stress assets in pharma are not really in branded generic space. They are more in the APIs and also that we can look at even now. That we are allowed to.
Now, eating out might become cheaper soon as the GST Council may consider lowering tax rates on AC restaurants from 18% currently to 12%. Nikunj Ohri sums up all the developments in this report.
The GST Council may consider lowering GST rate on restaurants with a caveat that restaurant owners will not be eligible to avail input credit. Now, the tax rate, the GST rate will be lowered from 18% currently to 12%, and obviously with a caveat that restaurant owners will not be eligible to avail input credit. The reason why this is being done is that the government has found out instances where restaurant owners are not passing on the benefit of input credit to consumers, and consumers are ending up paying more on their restaurant bills. Remember, a GST rate of 18% is charged in an air-conditioned restaurant, while a 12% GST rate is charged by non-air-conditioned restaurant. Restaurant owners with an annual turnover of 1 crore can also opt for the composition scheme, in which they have to pay a flat GST rate of 5% of their turnover. According to a government official, the reason why the benefit of input tax credit is not being passed on to consumers is that mostly the inputs procured by these restaurant owners are exempt, and input credit cannot be availed on exempted goods. Now, the GST Council will take a call whether to lower the GST rate on restaurants in its next meeting scheduled on November 10th. Remember, the GST Council had also constituted a group of ministers to review restaurant rates and also to make the composition scheme more attractive for taxpayers in a way that making available the composition scheme for more service providers. Now, this group of ministers is scheduled to meet on October 29th, where it will submit all its recommendations to the GST Council, and GST Council will take a stock on the recommendations given by this group of ministers.
Now, the Maharashtra government has released 4,000 crore rupees in phase 1 of its farm loan waiver scheme. Chief Minister Devendra Fadnavis said that the disbursal will cover over 8 lakh farmers in the state. He added that 75 to 80% of the disbursement will be completed by November 15th. However, he reiterated that such loan waivers are not the solution for the farm distress in the state and maintained that continuous investments in the agricultural sector will ensure sustainable development. Fadnavis also acknowledged the fiscal burden due to the waiver, but said that his government went ahead with it as it was the need of the hour. He also defended the use of online systems to fill up forms to avail the waiver and said that banks would have mismanaged funds had it not been for an online system. He clarified that no farmer who is eligible for the waiver would be stopped from availing it due to the online system. And how happy is this Diwali? We'll be talking about that a little later on Primetime Debate. It's Diwali special where we're looking at rural India, at consumer sentiment, at shoppers, at traders and businessmen. Is there really a dip in sentiment or is it a mixed bag? So do join us for that debate in just a bit from now. Now, UP Chief Minister Yogi Adityanath has emphasized the importance of the monuments to the state's tourism repeatedly. Today, while speaking at the Diwali gathering in Ayodhya, he said that he was keen to promote the ancient city of Ayodhya as a hub of tourism in Uttar Pradesh.
उत्तर प्रदेश देश और दुनिया का टूरिज्म का एक हब बने, इस देश की शुरुआत हम लोग अयोध्या से करने जा रहे हैं कि अयोध्या देश और दुनिया के सामने अपने उस पुराने वैभव के साथ एक बार पुनः स्थापित हो सके। लोग अयोध्या के बारे में नकारात्मक चर्चा बंद करके अयोध्या को सही मायने में समझने का प्रयास करें। अयोध्या मानवता की धरती है और अयोध्या ने मानवता का पाठ दुनिया को पढ़ाया है राम राज्य के माध्यम से।
U.S. Secretary of State Rex Tillerson gave his inaugural policy speech on India to a top American think tank ahead of Trump's Asia visit. Tillerson said going forward, peace in the Indo-Pacific region was crucial for the relations between Asia and America, and that Trump and Modi are more committed than other leaders to ensure peace in the region.
As we look to the next 100 years, it is vital that the Indo-Pacific, a region so central to our shared history, continue to be free and open. And that's really the theme of my remarks to you this morning. President Trump and Prime Minister Modi are committed, more than any other leaders before them, to building an ambitious partnership that benefits not only our two great democracies, but other sovereign nations working toward greater peace and stability.
Now, Xi Jinping's push to make China the leading global power by 2050 was the major talking point of the 19th National Congress of the Communist Party of China, which began today. In a marathon speech, Xi Jinping summarized the achievements of his government in the last 5 years and reiterated his commitment to open doors to foreign businessmen and deepening of state-run reforms. Very happy Diwali to all of you and stay tuned to Bloomberg Quint.